Hello, my name is Gilbert Clark. I'm the Executive Chairman of Meridian Mining. We are developing the Cabasau copper gold belt in Montagrosso, Brazil. It is what we consider to be the preeminent copper gold development story currently in South America. Hi, Matt. Good to see you.
Well, good to see you, Gilbert. We sort of did a technical session with you back in March. A few things happened since then. Continued drilling, of course, but you've gone and raised $18.4 million in what is a difficult market. Do you consider that an expensive raise? And sort of who are you attracting?
I say that what I consider an expensive raise. No, I thought it was a very good opportunity when I looked at the overall fundamentals of the market, where it come from Q1, where we're going to Q2, Q3, and the value of the equities and what we delivered prior to that incentivized people to come into Meridian. One of the fundamentals of Meridian our journeys over the last 2.5 years is we've gone from a venture issuer, so exploration development prospect, into resource development, now into economic and engineering development. So what we presented to our own shareholders and the investment community internationally was what we see as being a near-term developer in a very stable jurisdiction of Brazil. And that really tweaked to a lot of the institutional, local in Canada, but globally we had fantastic uptake in the stock.
Right. Okay. You're attracting institutions, which is good for a company of around $100 million market cap. Lots of companies say what you're saying. So why specifically did these institutions get drawn into what you're doing? Because that's ultimately the arbiter of truth.
Well, let's look at what we're developing in Brazil. Let's just a couple of fundamentals. If you're going to deploy your shareholders and existing shareholders and new shareholders' capital, it comes down to what I've always said in these discussions is execution risk. So in Cabasau, within Meridian, with our Brazilian guys who manage these projects, who deliver the guidance how we're going to build these mines, we have an execution team that is delivered consistently on time, on budget, and getting upside at each stage. So that's the key. Okay, if we're going to give you your money, who's going to spend it, how are you going to spend it? So we've cleared that. Let's look at the project, Cabasau. We've published the PEAs that developed low costs, small capex, rapid repayment. And we had a lot of feedback from people saying, oh, look, we're not too sure about this capex figure. I can draw to 3 or 4 mines currently being built in Brazil where they've demonstrated this capex. It's very low capex because we're using, with our Brazilian management team, we're going to use Brazilian manufacturers up to 70%. So again, that's positive. And then let's look at the commodity, copper, gold, gold, copper, depending on which. They are stable copper, stable commodities, known capex, known opex, known flow sheets, and all that. So we're not taking risks with new technologies. We're not taking risk with is an established market. Is it a balloon? Is it up? Is it down? These are constants in the world economy. So it's a stable commodity for the investors. And I guess finally, let's just talk about jurisdiction. Brazil is what I think is coming to dominate South America for mining. We can, in a time frame that our investors, our shareholders expect, and we're going to deploy money into a project. Are you going to get your projects? Sorry, are you going to get your permits? Are you going to do it in a time frame where we can see a return on investment? And what is the longevity of those permits? And this is what has really attracted me to Brazil, a combination of using our local managers to execute those programs, led by Dr. Adrian MacArthur, our CEO, in a jurisdiction where you can get permitted and you can advance a mine through to production.
Okay, but talk to me. There's a few things there that I want to understand, the moving parts. The types of institutions, are these natural resource or mining focused funds, or is it broader than that?
In the last raising, we had about 17 institutions. We had fantastic support from actually existing institutions within Canada. They represented about 16% of our of where the money came.
16 or 60?
About 16% of the institution of what we raised came out of Canada. I think it was about 14% came out of the US, and the rest came out of Europe and Australia. So that's actually quite an interesting point you just asked. Historically, in the Canadian market, the deals are often they'll present a structure in the financing. Okay, we're going to do this financing. What's the structure? And when I look at financings, I could look at what's going to be the benefit for my existing shareholders and what's going to be the benefit of the incoming shareholders. So I didn't present a structure, I gave them the deal. Okay, this is the deal. Free trading stock, reasonably priced, no hold period. So all of a sudden, it opens up to the investors, our shareholders, the incoming investors, not something that's locked paper. It's not something that's discounted, where people might try and sit on the stock for 4 months and then dump it and ride the warrant. So what we attracted was long-only funds. They were both natural resource funds, they were generalist funds, they were speciality funds. And this has been the attraction of the company, because we're not trying to mine the market, we're trying to build a mine here. And this is, at the same time, what we've recently announced is demonstrate how much upside this is. It's just not a single deposit. This is a multi-deposit belt. We're focusing on bringing on the Cabasau project into that next stage of economic and engineering studies. At the same time, we're saying, look, first mine, second mine, third mine, but we're not going to splash all the capital on some exploration upside. We're going to test it and prove it. We're going to build the equity value on that hard asset of the copper gold deposit at Cabasau.
But do you think that's part of the attraction to some of these funds? Because look, you're talking about a reasonably low capex, but you seem to be, correct me if I'm wrong, talking about getting into, there's a bit of kind of there's a focus here in terms of not splurging money left, right, and center. It's a focus on trying to get into a cash flowing situation which you're in control of, to address one of the biggest factors for funds, in my experience, which is to basically pay down that capital as quickly, that capex as quickly as possible, because time and money are not good friends in projects, mining projects. It sometimes is a killer. So what were those conversations like? What were their expectations? What were the things that they were attracted to in terms of the way that you're planning this?
This is not just a dialogue I reserve to the institutions. It's the same dialogue that I give my supporters within the brokering community, the small shareholders. It's the same story. So I'm bringing a different dialogue to how generally small cap juniors present. So we are deploying our capital, the majority of our capital, into the Cabasau open pit. We're going to test the exploration upside initially at St. Helena and the additional. But by bringing that advancement of the project to the next feasibility, the next engineering and economic studies, but imprinting into those studies the requirements of project finance from the typical banks, what that does, it produces a low risk. So that means I don't have to, when I go down to project finance, I don't have to do an equity destructive financing. I go to standard project finance banks. And that's so important to our shareholders' equity. Because then what I can do is I can raise a large amount of debt, small amount of equity, and then go into production and then pay back that debt in a very short period. That then means, as we take the project forward, the higher risk resource development or new discoveries, we're not going to finance that through expensive equity. We're going to finance that through net free cash flow. And then the value of equities increases because you're not taking risk with those equities. You're underlying the growth of the equities through cash flow on known prospects and known resource development. So this is quite key for us. Now, we're trading at the moment, I think, 0.16, 0.17 to NAV on the historical on the current resource and the current PO. So when the institutions look at us, and I guess for our own shareholders, our very supportive shareholders, it's like a 2.5, 3 times multiple just on basic economics. But the market at the moment, in general, for natural resources is somewhat orphaned. So my accounts and my shareholders and my institution guys who come in, this is a no-brainer for the economics. You come in, you look at this, we're saying this is safe jurisdiction, advanced permitting, and it's trading at 0.16 to NAV. Well, we should be trading at 0.35, 0.4 to NAV, potentially. Economic upside. So this is why we attracted these long-only funds, because not only do they see the immediate upside in the economics, in general, or financial economics, They can look at this as, but we're not going to have to hold this in 5 or 10 years to get net free cash flow. This is a short near-term producer. So for them, it's perfect. Then they get a yield, and they get increase in their equities through re-rating in production, re-rating of discovery.
Okay, so just I just want to remind myself about the PEA. I think, again, from memory, do correct me if I'm wrong. NPV 5 about 575. Nearly 60% IRR, and a payback based on 1650 gold and whatever 350-ish copper, under a year, right? So that, which is the equivalent of, it's significantly lower than $1,000. So probably like $700 per ounce gold equivalent sort of level. It's attractive when you sort of look at the numbers like that, but it's a PEA, plus or minus 30%, in an environment which has been, let's say, fluid with regards to cost and supply issues over the last couple of years. How quickly do you feel you need to kind of move through to the next feasibility study, given that you've got cash now to do the drilling, to kind of get on this kind of focus plan of yours? When do we see the next set of economic numbers? Because companies have been terrified of actually putting out solid economic numbers because they've been penalized by the markets of recent times.
I would say that they're afraid to put them out, because as soon as they put them out, their project died. That's why they don't do it. They're mining the market. This is the program, and this is really about hard asset growth. So what we're doing now with the team in Brazil is we're doing an infill program at Brazil, at Cabasau. And we published some notes 2 or 3 weeks ago about we drilled up some near-surface mineralization, very strong, 12, 15 meters. I think it was 1.5–2% copper equivalent. And we then did an infill program where in the selected fence, we saw up to 30% increase compared to the angle drilling to the historical drilling. So that program is advancing because the more economics, the more hard mineralization that we put into that first 50 meters, the better the overall economics will evolve for the next stage of engineering and financial studies. I can't actually say a specific term because we get in trouble with the exchange. But our next phase, we're launching in Q4. Now, we had some fantastic numbers in some copper results recently. I think it's 12 meters, 9%. Great interval. And that's the lower part of the pit, and that's really going to benefit the lower stage of the financial model. But one of the key aspects of the work, the studies that we're doing now, is our PEA was done on 2.5 million tonnes for the life of mine. The next phase we're looking at is probably taking it somewhere between, in year 5, from 4 to 4.5 million tonne per annum, up from 2.5 to 4 to 4.5. So that means that the back end of our financial model, we're able to be above 100,000 ounces gold equivalent. So then all of a sudden, this is quite a significant entity. Then that's what's really, again, this is what's driving what I think the great growth potential in our equities. When you look at the basics of our risk. What's risk? Okay, we've got 4 years of underground mining at Cabasau, so we know what the metallurgy is, we know what the geology is. We are increasing metal into the resource at the moment as we do the infill drilling. So this is generating what I think is the bedrocks of economics. We don't need specialized technology. I mainly just mentioned on the CapEx. Again, it's a very simple flow sheet. And I don't have to consider about the risk of the flow sheet because I've got 4 years production data on exactly the same flow sheet. There's no we're not reinventing the wheel here. We're not trying to take a metal that's locked in a matrix of something that you can't get out of unless we've got new technology. This is just the bread and butter of the mining industry, so it's low risk. So we've got, as we go through the next phase of growth, we want to show to both our institutional high net worth retail investors, okay, look, there's upside above Cabasau. We're going to see that with St. Leonard and other prospects along the belt. But at the same time, we want to grow that fundamental hard asset, Cabasau. We want to, make that bigger. We want to make it stronger, and we're going to take it to the next stage of engineering and financial studies, because I know that when we put them out, they will improve. And this is the certainty we bring. We look at, if you have a risky and you've produced sometimes there can be flimsy PEA, and ours is a very robust PEA. You don't want to take it to the next stage because you know it's just going to fall over. And I've seen this We've seen this across the industry in the last 30 years. This is not something new there. Got this delay. We have to do 5th, 6th, 7th, 8th, 9th, 10th metallurgical study because we can't make the thing work. Ours works. We've proven it's worked. We've got all the data from BP. We've got the production history. We've got the economics driven by a very good engineering group in Brazil called Australian group called Asenco, who built mines. So what we're doing now is focusing on growing that hard asset of Cabasau deposit, making it more robust, more long, more bigger, showing to our investors, okay, that's not just a one-trick pony. This is a VMS belt, and it will have multiple deposits along this belt. But let's not spray out hard one investors' equity everywhere. We'll focus. We will test the upside and prove that there's more upside to the belt. Fundamentally, we want to take that long-term equity growth of developing a copper gold mine in the near term, and this is why I come to often when I speak to my investors. Again, the broad range. It's about managing the expectations as we go through these cycles across the commodity market.